Welcome to the Invest with Clarity podcast, where you will learn how success in investing, as in life, is the result of absolute clarity. Mark Pearson of Nepsis in Minneapolis, Minnesota, shares his passion for portfolio management and commitment to transparency and communication to allow investors to fully understand what they own and why, bringing them to clarity in their investments. And now, here are your co-hosts, Matt Halloran and Mark Pearson.
Hello and welcome to another Invest with Clarity podcast. I am your kind of host, Matt Halloran. I'm not going to be doing much today, as I haven't, because Chuck is here again. And Chuck is going to talk with Mark about the recession obsession. Now, I know that you guys have heard both of those words pretty regularly, especially the word recession, and we're going to dive into it a little bit more deeply. But I'd like to just turn this right over to Chuck, Mark, if you don't mind, because he said that he had something he wanted to kind of preface the show with today. So, Chuck, you want Mark? You okay with that?
I don't have a problem at all, sir. Chuck, take it away.
Okay, guys, thank you. Mark and Matt, much like our addiction to prediction, right? We've said that for years. Whenever a recession comes around, we are obsessed as a society about it. We ask everyone's opinion whether we're going to be in one or not, or whether we are in one.
And ask the time.
And it's a political football, right? We all know that piece to it. So I thought what we would do for our folks and our audience is kind of unravel the onion skin to talk about truly what a recession is, but those who have clarity before you enter one, the position changes you make, and then coming out of the back end, how those have been rewarded exceptionally shown. Now, before we get to that, Mark, I got to read this email to you, if that's okay. That's what Matt was referencing. So there is a group called the Conference Board. Just to kind of let our audience know, the Conference Board it's a think tank. They're in the greater DC area. They've been around, over 100 years. Anyway, they determine the LEI, the leading economic indicators. They also control the Consumer Sentiment Index, which is kind of this barometer on the general public and how confident they are in the economy.
Yeah, they're pretty big. They're very, very well followed.
They really are. And thanks for saying that, because I want to I'm going to read this verbatim. I'm not going to tell you the person who sent it to me, the name of that individual, but it says, "Dear Charles," so they use my formal name, "as part of ongoing research," that's right, from the Conference Board on Workers and the Workplace, we seek to determine employees' perspectives to better understand employee perception, needs, motivation, and fears, Mark, right, during an economic downturn. Woo. This month, we really want to hear from your point of view. We love your thoughts. And it says in the title of the email, "Is there a recession coming, or are you prepared?" Now, I want you to comment on that first of all, but then I'm going to tell you, Mark, and everyone, I actually filled the survey out. And in the other space, you could write things that was of your opinion versus all these other boilerplate things. So What do you think about that? What do you think about what's going on in the world around us with the recession obsession?
Well, first and foremost, I'm actually a little surprised and very impressed that the Conference Board would actually contact you. I do know that we have you commenting in the press quite a bit more. I like it when you comment as opposed to me commenting, because then everyone bugs you and argues with you and asks you all the questions and not me. And
don't you like that, Matt? You know what they say, flows downhill, right?
That's right. I can just fly under the radar. So I am impressed that they would do that. I know you're setting me up to go in fuego on this whole recession thing. I mean, quite frankly, guys, I wish we had a recession every 2 years, because everyone's going to go, "What? A recession every 2 years? What are you talking about?" Well, let me say it for the 90 millionth time. You get the best deals on businesses when they're on sale, and they always go on sale before the recession happens. Let me say it again. Before the recession happens, we believe that the stock market is a leading indicator of economic activity. We're going to get into the stats of that in today's podcast. I have been asked many times, do you think we're in a recession? Do you think we're going into a recession? And my response to them is, I don't care. I really don't.
That's the answer.
Because the fact of the matter is, as someone who has transparency and flexibility and a time-tested process before progress, and investing in great businesses over time, these pullbacks have been phenomenal for us. And we love pullbacks, just like the one we had in 2020. So does that answer your question about how I think about that whole thing?
It does. And I even could tell you pulled back a little, and I think you're saving for everyone, even the crescendo as we get through this. So,
well, I got to save some of my energy.
Well, that's true. You got it. So here's what I thought we could maybe unpack here. So the mere fact that they're asking this question, do you think we're in a recession, leads one to believe that it's this broader, subjective, opinionated set of points that would describe a recession. There is actually a defined definition, right? We've talked about this before. It's this group called the National Bureau of Economic Research, the NBER, right?
Yep.
And much like the Conference Board, they're set up the same way. They're not a government agency, but they're nonprofit think tank, been around.
Yeah, can I interrupt you?
Yeah, no, go right ahead.
You actually, listen, only the president decides if we're in a recession or not. Oh, sorry.
Well, he came out in the White House lawn last week, and
sorry.
That's
sorry,
okay.
Matt. Okay, go ahead, Chuck.
I see Matt shaking his head over there. Well, it's part of it that it's open-ended, and it shouldn't be. But anyway, that's the point I think that we can always argue about as economists or portfolio managers. But what I find striking is this obsession with how much of an opinion this is, number one. And what that does, Mark, correct me if I'm wrong, it stirs the pot of ambiguity, which is the antithesis
100%.
Right.
Yeah,
so if everyone just in fear about, and I get it, recessions, people can lose their job. You get businesses file for bankruptcy, depending on the severity of them. We're not dismissing that. But for investors, right? They actually, what you said, they're the gift that's coming on a silver platter. And our even investment community won't structure it that way. So
well, look at it this way. Yeah, Chuck, look at it this way. We're in the dog days of summer.
Yeah,
it's funny. I actually pulled up, I think I sent it to you, or maybe I sent it to a couple of my other staff, a clip from my radio show I used to do in 2017, Investing for Success radio show. And it was a clip. And in the clip, we were talking about actually a recession back then. And we were talking about how the media is obsessed with trying to get you to keep your eyeballs on the screen. Let me help for those who don't understand how this works, Chuck and Matt. A TV show, a TV program, a news program is funded by commercials. You understand that, right?
Sure do.
Okay. So in order to sell commercials on one's program, you have to prove to the company that you want to advertise that you have eyeballs on the screen watching them, correct?
Exactly.
Okay. Therefore, the program on TV's responsibility is to provide you with the best content they can to engage you to keep your eyeballs on the screen so they can sell commercials. Okay, this is getting to the basic bottom line of marketing and advertising. All right, now just hang with me. I'm almost done. In order for people to keep their eyeballs on a screen, what is the one biggest strategy that is going to get people to stick at looking at the TV? Something that brings them fear. Exactly. Something that is going to cause them angst, something that's going to cause them to want to know more information to ease the angst and the anxiety that they're feeling by all the chatter that's going on. And every single day I'm listening to recession this, recession that. Has the market bottomed? Is the market going to test the lows? Yada, 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 yada. Who flipping cares? Because if it goes down, you buy more of the great businesses you want to own. You constantly use your buy discipline. You constantly use your sell discipline during this period. Because as you know, Chuck, Once the NBR comes out and says, hey, we're in a recession, the markets are already up. What is the S&P up, by the way, from its bottom? About 10%? 8%?
It's up 9%. It was
9%.
down 25%. Now we're down about 16. So we're 9% off.
9% already been left on the table with people staring at the TV wondering if we're in a recession or not. Here's the one thing I do know about recessions. They do eventually end. I don't know if you know that or not. There is economic expansion and contraction. Ask any successful business owner. And when the business owner is running their business or businesses and there is a contraction, what does a business owner do?
They invest more into their business.
Bingo. Exactly. So thank you. I want to thank the media. I want to thank you for discussing recession. We should write a song about a recession. Recession. What's the progression?
And every other word that rhymes with it.
Right?
You know,
Wow. I'm sorry. I just have to jump in here. I can't wait to hear that song. It's going to be a top 10 guaranteed on Billboard. Absolutely.
I doubt it. But yeah, you're right, Chuck. This recession talk, it's been going on for so long. The S&P, what was the bottom of the S&P pullback? Was it 25%? 25%.
Yeah.
So we got down 25%.
NASDAQ was down 35.
Yeah. And we've already rebounded off that. And by the way, everyone's going, well, could we test the lows? Who knows? Who cares? Because if you already bought when it was down 25%, kudos to you, because you've got a great business on sale that you can own long-term. Now,
absolutely.
Just need to say this just as a disclosure. Just because it's a great company does not mean it's a great investment. So let me also add that when things go on sale, lots of great companies go on sale. Some go on sale more than others. And the value of those businesses is relative, meaning you need to have your process of how you value a business before you invest in it. You have to understand all the moving parts of investing in those businesses and how they impact your portfolio. And lastly, make sure you're appropriately asset allocated. All right, there's my disclosure for today.
And I love that. And I want to take two things. So I'm going to take you back to two words you said, but then I want to talk about, if we could, just I want you to get your thought process here about what you just mentioned. So I want to talk about next, after I get this point, the microprocessing chip sector, right?
Yes.
About three businesses, one that's a deep value trap, came up on our investment committee. You said, no way. Another one, which we've owned for a long time. And another one, which you're contemplating, which tends to be much more on the growth side. So I want you to think about this. But what you said, I'm going to go back to the recession piece. The NBER, which declares recession, doesn't even call it a recession. You just said they call it either an expansion or a contraction. They don't even use the word recession. It's almost like this made up word that has become a political football. And here's what they do, Mark. They say, we're always in an expansion until we're not. And when we're not, we're in a contraction. I mean, kind of is pretty simple, right? But here's the thing you said, and I'm going to pass it back to you on the microprocessing, is that the contractions, and this group, think about this. Ben Bernanke used to be on this committee. These are high-level, what I will call them, professors, academics, very intelligent, but almost like the Fed. They're methodical, they're deliberate. In three recessions, the COVID recession, the recession that preceded the 9/11 attacks, and the 1990 recession, which was savings and loans in the first Gulf War, savings and loan crisis. The NBER told us that we were in a contraction, not a recession, but a contraction, after the fact that we were already out of it. So if we sat around on our hands and knees waiting for the recession to be declared and undeclared and made our investment decisions, we wouldn't be in business. That's not clarity, right? So
addiction to prediction. 100%.
Exactly.
Well, you got to think about it this way. The industry, the media, the economic forecasters, all these people, they speak in generalities. They speak in general thoughts because they're correlating everything to, quote, the stock market, because people are invested in the, quote, stock market. Let me say it for the 9 millionth time. You are not invested in the stock market. You go to the stock market and you buy and sell the businesses that you want to own. Even if it's in an ETF or a mutual fund, they own businesses. And the fact of the matter is that all these talking heads want to engage you in a conversation that is so general in nature. Nobody wants to get to the bottom line fundamentals of a great business being owned long term. As Jim Cramer says, there's always a bull market somewhere.
Absolutely.
And while there's no guarantees, and while we've seen significant performance in our portfolios the last several years, including this year, we have significantly outperformed the downside on the markets, meaning we've lost a lot less. The fact of the matter is that's done by owning great businesses and having an asset allocated portfolio. And what we really should be talking about is, if you're in a recession, if you're going into a recession, how should you be having your money managed? How should your portfolio be allocated, and not worry about whether or not you're in a recession or not? Because guess what? Whether there's a recession or not, whether you're in a growth period, an expansion period, or you're in a contraction period, great businesses still make money and they still grow.
You're here.
And in an inflationary environment, when they have pricing power, that's even better. And a lot of these companies pay dividends. A lot of these companies during this quote unquote recession that we've been in, their earnings forecasts have not really been lowered.
It's fascinating, isn't it? They're well-run businesses, obviously.
Exactly. So when people ask me if we're in a recession, I say I have no idea. When they say, do you think we're going to have a recession? I say 100% we're going to have a recession. I just don't know when. So, I mean, I just think we're going to have a recession again in the future. We'll probably have a lot more during our times in managing money for the next 50 years.
And that's how every one of the individuals who's on those business shows should answer it, and they don't, because what they want to do is they want to make some big splash, right?
They want to look important. They want to look smart. That's why I can't go on those programs, because I can't even look smart.
I just wish one day eating the lunch of one of those, I would just relish, and I'd watch the tape over and over again. Can I draw you back to this piece? Because I thought it was really clear about you. I don't want to, if you're okay, because I know sometimes we don't want to mention, we don't have to mention the names of these businesses, but semiconductors come up, right? So what you say, if somebody says, hey, look, I like that industry, it's sold off during this period. And you got three companies. You got one, which is a value trap, right? Which makes chips for PC makers, right?
Intel.
You got one business that's right in our wheelhouse that we've owned for a long time. And then you got another one that you're
AMD.
You got AMD, and you got another one you're contemplating that probably has the greatest power to their chips. They probably are going to be revolutionary in getting into blockchain technology. They already were in gaming. It's said we know where that is, right? NVIDIA. So talk a little bit about those three businesses. They all do similar things, but why would you be attracted to one over the other three, just in kind of specific sense? And that's the clarity message, I think, coming across.
Well, we started buying AMD when it was about $8 or $9 a share years ago. It's now today trading at about 100, actually traded as high as 160. And of course, our sell discipline, we've taken some profits along the way. AMD was in an interesting, they had a culmination of several things that came together, including great leadership from the CEO. And Intel has been struggling. And over time, if you watched, you would see that AMD was taking over Intel in terms of chips in the computers, and they were also expanding their platform in terms of what types of chips. One of the big areas that AMD is in right now is in the data center, which is one of the fastest growing areas in the market. But let me take a step back on semiconductors in general. I've owned semiconductor stocks for decades. We actually owned NVIDIA. We started buying NVIDIA at $60 a share, and we sold it at like, I don't know, 260 or something like that. It split twice while we owned it. I mean, we've owned it. NVIDIA was a long-term hold, and we sold it to buy AMD actually. And it was a valuation play, and the cycle of the chips, AMD, I thought had better upside. And ironically, over the last 5 years, AMD has actually outperformed NVIDIA. It would probably surprise a lot of people. But all that being said, Intel had some structural issues. They were not keeping up with the future of what was going on in the semiconductor space, which includes, in my opinion, semiconductors historically have been very cyclical in nature. And as I've said for the last couple of years, I believe the semiconductor sector is actually more secular in nature because of all of the everything that's going on with AI, everything that's going on with autonomous vehicles, everything that's going on with electric vehicles. And if you look at the marketplace today in general, there is a shortage of chips, and we're supposed to be in a recession. That typically does not happen in a recessionary period. And I believe that's because the demand for chips is only going to continue to grow over time. And so the other company that we do own, because we just filed our 13F today, so it's public information, or yesterday, is Qualcomm. And Qualcomm's only down like 15% year to date. And plus it pays a dividend. At the end of the day, these are really well-run businesses that are printing cash and making money and are going to do well longer term.
Paying dividends like Qualcomm.
Yeah, Qualcomm pays a dividend, right? And so Intel, in the case with Intel, value trap means that it's a company that on the surface looks like it's trading inexpensively, but Intel's been inexpensive for years, just like Cisco Systems has, Oracle has. These stocks have been trading at significant discounts to the overall market. And in each case, there's different reasons why they have and why they are. IBM is another one. And there's different reasons for that. In the case of Intel, I think they're behind. I think they're behind the curve on the AMDs and the NVIDIAs and the Qualcomms of the world. And so that's why we stayed out of it, and we continue to own AMD. By the way, we bought some nice AMD in the 70s recently, now trading at 100. Volatility creates opportunity.
I am so glad you got into the depth of that, because I love to pivot that conversation about what everyone else is speaking to and what we're actually doing and what we've been doing right throughout all of these. I think we've been working together for 15 plus years, but go back to the great financial crisis, go back to the European crisis, right? Yep. Walk through the issues that happened around the election of 2016. And then we had the taper tantrum, right? Yep. And all of these, which if you go back and look at the news reels, the world was collapsing and falling apart.
Yep.
And it's a gift, as you have always said. And I think as we walk through this, hopefully a year from now, 3 years from now, we're able to pinpoint this as kind of a hallmark, if you will, podcast where we're able to lay it out on the table. Hey, here's what we've been doing. Here's what we are doing. So
yeah, same thing during COVID, and same thing we did in the financial crisis. Same thing we did in 2016. Same thing we've done from the beginning, which is take advantage of our buy discipline and our sell discipline. And execute on that, and don't deviate from it. Don't make decisions emotional, make them pragmatically. Trust the process before progress. And our process has been around long enough. It's been time tested. Obviously, we don't print returns on purpose. We don't print returns because we don't want people to have us manage their money because of our returns. I want them to manage. I want to be able to manage their money because they believe and buy into the process, because returns are a result of the process. And I just think about what we've done in the last 2 years selling high growth stocks, because people have been asking my team lately, how do you go about making the decisions in the companies that you own? And obviously that's a longer, complicated conversation, but it starts with top down, right?
You got it.
We are top down analysts, and then we're bottom up analysts. So top down means you look at the overall economy, you look at the sector that the companies you want to own are in, you look at what the macro long-term looks like for those companies. And then you go to the bottom up price process, which is you pick the companies that you like the best, that seem to be the companies that are going to benefit the most from that secular shift in those businesses. that's why we own a lot of energy. I mean, energy wasn't going to stay negative forever. Common sense is uncommon, I guess. I mean, it seemed like with low interest rates, they weren't going to stay at zero forever, right? Sometimes you have to trust your process and not be emotional in the decision-making process, whether there's talk of a recession or not.
So here's what I love to do, Mark. If I can, I could humor myself by giving you these data points. I just want you to think about these, and then I want you to comment here as we kind of roll towards the end of this. So, and you love me, the research nerd, right? You go back all the way post-World War II, right? We're in the 12th recession, which is assume we're in one. So I would want to know as just an investor, kind of just the facts binder. So here's what they are. So 12 recessions,
yep,
right? They last 9 months in length.
On average.
Average drawdown from the top to the bottom is 24%, right? We kind of had our 25. From the peak to the trough, and then once you get out from that trough to peak is 5 months. And here's the thing, from the trough to the next 12 months, this is just owning the index. This isn't somebody who's got a process and a discipline, is 45.9%.
Wow.
Which isn't fascinating. Why aren't the business channels, or why isn't anyone else talking about that? And that's why we talk so gleefully. You're saying, I want a recession to happen.
Well, that's easy. Yeah. The reason why they don't talk about that is because they want people to keep their eyeballs on the TV and live in fear. I mean, that's ultimately it's kind of Nepsis is ultimate clarity, right? Know what you own and why you own it. And we talk about the behavioral aspect of investing, which is where our flexibility and transparency manages the behavioral aspect of investing. The good news for us, quite frankly, is there will always be lots of people who make investment decisions emotionally. Thank goodness, because if nobody made investment decisions emotionally and everyone managed money kind of the way we do, where we buy businesses and hold on for a long time, it'd be hard to buy businesses on sale. Yes. Right? So
I'll never forget the time
we need people to make irrational decisions and be emotional. That's a fact.
Remember the time we were working in the office together and I'm screaming at the television because of those folks that are just blowhards, and you sit me down and say, look, dude, if we didn't have those guys saying this, we wouldn't be where we are with investing with clarity. So be thankful they're saying that stuff so we can tell people the truth.
Exactly. Why do we do this podcast anyway? Let's not tell people our secrets. Oh, Chuck. Yeah. Well, so we're already up from the bottom about, call it 10, 11%. From the bottom. So which means in theory, on average, if 45 was the average, we're 34 more points to go.
You got it.
And I'm looking forward to seeing that 34 percentage points come back. Quote, no guarantees, obviously. But historically, history can teach us a lot, can it?
Yes, it can.
Yes.
Thank you very much.
Yes.
So what do you think about that one, Matt? Was that...
Well, Chuck, I love it. I love it when you bring up stats and statistics and all the research that you do. And then Mark kind of just off the cuff just has these great responses to all of that research. And I know that you guys don't do an enormous amount of planning ahead of time, but you guys are just two peas in a pond. Yeah, that doesn't surprise me at all. As a professional podcaster, no, not really. But the organic nature is why I think you have so many people who listen to the show. The other thing is very simple. And I'm going to quote Mark there, as I do usually to wrap up the shows, right? A recession obsession, none of it matters if you know what you own and why you own it. It doesn't matter. You guys can consistently talk and see those talking heads and get afraid and all of that stuff. But if you have real clarity, that stuff doesn't matter. So Mark, hey, here's the deal. If somebody wants to have that clarity who doesn't have it already, where should they go?
They should go to investwithclarity.com. Reach out to us and we'll be happy to talk to them.
Listen, wouldn't it be fantastic for those of you who are listening to this to just have the opportunity to not have to listen to all of that crap, right? To just be able to say, you know what, I got this. There's people who are watching this. I actually know what I own and why I own it, which is where 90% of the world isn't. And if you have that clarity, you have that confidence, and you have the ability to maybe potentially retire in a way that you're not looking at your phone every single solitary morning and checking your Schwab account to see what your portfolio is doing. How wonderful would it be to have that level of relief? And I believe that you can have that with Nepsis. So for Mark Pearson and Chuck and everybody at Nepsis, this is Matt Halloran, and we'll see you on the other side of the mic very soon.
The content discussed is for informational purposes only. It is not a solicitation or recommendation for any securities that may be mentioned herein. Advisory services offered through Nepsis Inc., an SEC registered investment advisor.